It's early 2023 and it's fair to say that we're reaching levels of uncertainty that many haven't experienced in their lifetimes. This uncertainty is not good when it comes to thinking about your retirement. Too many Australians see the share market as a representation of that uncertainty, and many are looking to property to secure their wealth for now and the future. In this video, I'm going to discuss self-managed super funds from a perspective of borrowing. Okay, let's jump into it. To understand how the borrowing is structured, you need a basic understanding of how the SMSF works. Your super is held in trust. With that trust, you have a trustee. The trustee's job is to ensure the best outcome for the members. The members are whoever's superannuation it is. For example, if it was an SMSF for Mr. and Mrs. Smith, they would be the members. It's worth noting here that the trustee can either be individuals or a company. You need advice from an accountant when taking this into consideration. Because it's easy to explain here, we're going to use the company as the trustee in this example. In this example, the Smith Super Fund Propriety Limited, which is directed by Mr. and Mrs. Smith, control the Smith Super Fund Trust. Generally, I find that part's not too hard for people to understand. Where people generally get another level of confusion is limited recourse borrowing agreements, or LRBA for short. Before I get into that, if you're thinking about buying property through an SMSF, then stick around till the end because I'm going to reveal the number one thing I see that people get wrong when setting out on this process. Back to the LRBA. Basically what that means is that in the event the property has to be sold and if the bank make a loss, it just means they cannot go after the rest of the super fund to recoup their losses. This regulation was put in place to protect the retirement savings of super holders. So to facilitate the lending, an addition needs to be made to our structure. The reason for this is the property cannot be held in the same trust as the rest of the super assets. Otherwise, the bank has recourse to the rest of the assets in the super. What happens is the property has to be held in a bear trust. So let's call this the Frankston Bear Trust. And the trustee is the Smith Frankston Bear Trust Propriety Limited. I know this is confusing, just understand here that these structures are set up to protect you. The nuts and bolts are actually pretty similar to how a normal home loan works. It's worth noting that you will find it hard to find a larger lender that does SMSF lending. Therefore, you're best to use an experienced mortgage broker. You can borrow money for different types of properties, residential or commercial. Depending on what type of property you buy, different lenders will have different lending policies. So I'm going to generalize what you can do here. You can borrow up to 90% of the value of the property, obviously depending on the lender. Bear in mind, the lower amount you put in means the higher the amount the lender is putting in. That represents a lot more risk on the lender's behalf, and you'll pay handsomely in fees and higher rates. Whilst we're on the costs, if you don't yet have a super fund, it's important to know that there are going to be fees for everything here. I would not suggest trying to avoid costs in this area because generally it just increases the risk that it's going to cost you a lot more later on. Anyway, back to the loans, 30-year loan terms, which is pretty standard. You can do interest only. Some lenders even allow you to have an offset account. How is borrowing capacity calculated for SMSF loans? For a standard home loan, it's income minus expenses and whatever's left can go towards the loan repayments. This is a simplification of how it's done, but it's accurate. With an SMSF loan, your income is your contributions from your employer, your rental income from the property you're going to purchase, and any other income from the remaining assets in the super fund. The expenses are basically the cost to maintain the property and your accounting and admin fees for keeping the super fund going. Okay guys, the number one thing people do wrong when it comes to purchasing property in an SMSF is they want to go and buy the property first. Putting it another way, they don't do everything they should do prior to signing the contract. Why is this a problem? There's so many problems it's not funny. The SMSF space is complex because there are lots of rules which are set to protect you. Usually people go on wrong by unknowingly not following the rules. For example, many conveyancers or solicitors will advise the bear trust to be set up prior to signing a contract. A common problem here is that people sign the contract and or nominee before they have done anything and just think they can assign the nominee later on. That's not necessarily what the legal people will suggest. What you need to do is just to make sure you've got the right advice in place before you do anything. So you need to make sure you've got your accountant, your financial planner, your solicitor, and your mortgage broker. These guys are the experts and you should be using them to help make the right decisions. If you want to talk further about SMSF loans, give the QR a scan or find the link in the comments below. Cheers.